What's going on? Welcome back to the channel. So today we're going to talk to you about Eli Lilly. They just dropped their Q4 earnings. I want to go over some of the absolute key highlights that you need to know coming from an investor standpoint, some support and resistance points, data points, everything that you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So at the time of doing this video, it is at $870, up 3.31%. Looking over at their Q4 numbers, tentatively, they hit all the marks. Revenue, they did beat. So $13.53 billion for that, and then $13.43 billion was expected, up 45% year over year. Earnings per share also was a beat, $5.32 versus $5.08, and that was expected, and then that worked out to be 102% year over year growth. So near the end of the video, I'm going to go over all the key highlights that you need to kind of take away from all their earnings. But going over some additional data, I like to bring up shorts, not because it's a squeeze play, but ultimately it kind of goes to show sentiment. And so right now shorts are returning 13,000 shares. It's not a squeeze play like I just said for transparency, so don't get me wrong, because 0.92% of the free float is being shorted. But you can kind of see shorts were somewhat hesitant about their earnings. They were really increasing quite a lot over the last little bit. So again, they kind of maybe were insinuating that their earnings was going to be a miss. You do also see at the same time some signs of manipulation. Cost to borrow minimum is negative, so negative 0.16%, meaning there is brokers out there physically paying people to short this stock. Nothing really crazy, and obviously it doesn't really drive demand all that well, and they would have lost a lot of money essentially if they did. But nonetheless, though, going into this earnings, though, the implied move was 4.44%, so obviously it's kind of within the parameters. And ultimately you kind of see the 2 weeks leading up to the earnings. So you have the 2-week move under this column, 1 week, 3-day, and then 1 day. It's all looking a-okay. So pretty much it's never actually done that where you had all green leading up to their earnings, and then post earnings you have a beat. So this is the very first time in almost 2 years that they've hit the mark on the, or nail on the head, whatever you want to call it. 147 million in calls, 32 million in puts. 49% of all the options being done today are bullish in nature, and there's a consensus for it to be roughly around that $900 range next. And ultimately, moving over to this, bears are anticipating for it to be around that 860. So definitely there is more upside anticipated, and with it at $870 and change, it is trading between this R3 and this R2. So 890 is going to be the next strong target / resistance. Wasn't touched today, but going into the next couple trading days, just watch for that. Flip side, 851 is going to be the next strong support. And so it kind of had a low today of $835. So a lot of volatility, but just take note of some of these support and resistance points going forward. As far as unveiling new earnings, you only had one price target that was given today, and that was $1,100. That was done by Bernstein Courtney, who has a 78% success rating, so pretty good for that. As a consensus of all the ratings right here, you have $998.73, the consensus, and that does represent a 14.62% upside. So this is your quick summary of absolutely everything that you need to know. When it comes down to the earnings, kind of stay tuned for this. This is going to go over, again, everything that coming from an investor standpoint and from their earnings that you need to take away from all of that. Give yourself a shout out if you did buy today, if you sold, or if you did options. So give yourself a shout out. And then one final thing, if you do want all this information completely free, analyst ratings, forecasts, ownership, everything under the sun, definitely pop over to IBKR. Has all the information that you need to be a better investor and everything. And like I said, it's free, so take a look at that. Link in the description below and also the comments. And without further ado, let's get right to it.
Eli Lilly projects 32% revenue growth for 2025, fueled by incretin expansion and new launches. Earnings call insights, Eli Lilly and Company, LLY, Q4 24 management view. CEO David Ricks highlighted a 45% revenue growth in Q4, with significant contributions from Mounjaro and Zepbound. He emphasized ongoing expansion in manufacturing to meet demand and investments of over $23 billion in manufacturing facilities since 2020. Regulatory approvals for 𝗪𝗓𝗪, 𝗪𝗪𝗧𝗛, and Zepbound in 2024 were noted as critical milestones, alongside the acquisition of Morphic Therapeutics and the initiation of new Phase 3 programs for promising assets. CFO Lucas Montarce reported a gross margin increase to 83.2%, driven by favorable product mix. He also noted operating income more than doubling to $5.6 billion, supported by strong new product sales. Outlook. The company provided 2025 revenue guidance between $58 billion and $61 billion, reflecting a 32% growth compared to 2024. Management expects significant contributions from U.S. 𝗖𝗢𝗡𝗡𝗘𝗧 growth and international Mounjaro launches. Earnings per share, EPS, for 2025 are projected at $22.50 to $24. Management anticipates new indications, expanded manufacturing capacity, and access improvements to drive growth. CEO Rick stated, "We believe both Mounjaro and Zepbound are still very early in their launch cycle, signaling confidence in sustained momentum." Financial results. Q4 revenue growth of 45% was driven by strong performances across incretin products, oncology, immunology, and neuroscience. Mounjaro global sales reached $3.5 billion, with U.S. Zepbound sales at $1.9 billion. Zepbound has become the market leader in the anti-obesity segment by new prescriptions. The non-incretin portfolio also grew by 20%, with notable contributions from Verzenio and 𝗪𝗪𝗧𝗪. International markets, including Europe, Japan, and China, showed robust growth, with Mounjaro launches in all major European markets. Q&A. Tim Anderson, Bank of America, asked about 2025 guidance assumptions. CFO Lucas Montarce confirmed that guidance reflects a continuation of 2024 prescription growth trends. Terrence Flynn, Morgan Stanley, inquired about Zepbound payer dynamics and access. Patrick Johnson explained that Medicare coverage related to obstructive sleep apnea, OSA, is anticipated in the second half of 2025, with progress also expected in Medicaid states. Chris Schott, JP Morgan, questioned the broad study scope for orforglipron. Dr. Dan Skavronsky expressed confidence in the drug's safety profile and emphasized its potential to address broad primary care indications. Steve Scala, TD Cowen, raised concerns about the addressable obesity market. CEO Ricks reiterated confidence in the market's long-term growth potential, supported by sustained consumer demand and capacity expansions. Sentiment analysis. Analyst tone was cautiously optimistic, with questions focusing on supply constraints, market demand, and access. Concerns about compounding issues and payer dynamics were notable themes. Management maintained a confident tone, emphasizing robust growth drivers, successful launches, and strategic investments. CEO Rick stated, "We are very bullish on this whole category, being reimbursed like we expect other medications." Compared to the previous quarter, management displayed heightened confidence, particularly regarding supply improvements and expanded product indications. Quarter-over-quarter comparison. Revenue growth accelerated to 45% in Q4, compared to 42% in Q3. Mounjaro and Zepbound continued to lead, with expanded launches and access. Guidance language shifted to highlight broader geographic and therapeutic expansion for 2025. Analysts in Q4 focused more on access and market dynamics, while Q3 discussions emphasized supply constraints and new product rollouts. Management's confidence in addressing supply challenges and scaling demand generation efforts increased notably from the previous quarter. Risks and concerns. Management identified payer dynamics and access limitations as ongoing challenges, particularly for Zepbound and future indications like OSA. Analysts raised concerns about the compounding market's impact on demand. CEO Ricks maintained that compounding poses no significant financial risk but emphasized safety concerns. Competitive pressures, including potential new entrants in the incretin space, were acknowledged but framed as opportunities to showcase product differentiation. Final takeaway. Eli Lilly ended 2024 on a strong note, with 45% revenue growth in Q4 and accelerated uptake of Mounjaro and Zepbound. The company projects 2025 revenue growth of 32%, driven by incretin demand, international launches, and new indications. Significant investments in manufacturing and R&D underscore management's confidence in sustaining long-term growth. Analysts' focus on payer dynamics and supply challenges contrasted with management's optimism about overcoming these hurdles, signaling a positive outlook for the year ahead.